Hi, everyone. Welcome back to the show. Today, I have with me Graeme McDermott. He is a prominent leader with decades of experience in data and data leadership, now the chief data officer at an insurance company, TempCover. Also, a previous guest on my show. So, one of the few people that have come back for a second go. Maybe you're a bit crazy, Graeme. But yes, welcome to the show, Graeme. Great to have you here. And welcome back again.
Thank you, Jason. I'm assuming the decades. Do I have to say how many decades? Maybe that's why I'm allowed to come back again because
Yeah, once you
obviously
reach a certain stature
yeah,
of
it's a visit per decade. I think you're allowed. So yeah. So actually, it is over 3 decades.
is
Clearly,
it?
I had an easy paper round.
Yeah.
In data analytics, I am man and boy data analytics. I didn't leave the field. I didn't start somewhere else. I'm just data analytics. Probably the last 15 plus years as director of data, CDO. I think the topic for today, we're talking around particularly around mergers and acquisitions. So, as the data man, I have kept track. So I think I've just gone through my ninth major acquisition, or been on the end of an acquisition, and then numerous smaller ones, etc. Where I've been at a big company and we've acquired a smaller company, but yeah, always in the data team at varying levels. Probably the last 15 years at the senior level when we're going through that process. So.
Yeah, I hadn't realized you'd been the other way round of mergers and acquisitions, and yeah, you rightly point out it'd be great to talk about kind of the being in the data function, when that merger and acquisition is happening, probably through the lens of being acquired, but it could be interesting to hear how that works the other way around as well, as in being the acquirer. But yeah, the approach to data and insight during that merger and acquisition, which I'm comfortable if you are to abbreviate to M&A as it's known in the field for the rest of this. But yeah, just that process of the M&A, the transaction, how it happens, how it comes about. And then how you, as the kind of data leader in the data function, the data team, get ready for it, support it, show what's possible, help in any way you can with making sure the acquisition's smooth and providing what's needed during the process of kind of due diligence. Get my words out. Due diligence. So yeah, that'd be great to talk through some of that. And yeah, nine of them. Are you jaded by them, or are you do?
I mean, I sort of run through it. So I did demutualization. So joiner mutual was demutualized. I did private equity buyouts, private equity buy-in, IPO, FTSE 100. To be honest, I think the only style of acquisition I've not been involved in was what do they call it? Foreign oligarch. We shed loads of money. Probably because I've worked for FCA regulated companies, a little bit tricky for them to turn up and
not football clubs. Yeah, not football clubs.
No. But I think the due diligence point is a really interesting point, which is part of the M&A. There's this whole due diligence process, and there's two bits to it, I suppose, which is you as the company that is going to be acquired. You can either decide to do your own due diligence up front, so you would get a third party and you would pay them, but obviously they're meant to sign up as independent. And that could be, a big four consultancy. It could be a variety of specialists in different areas across, tech, across finance, across legal, across commercial. And then there's the other way around, which is the sort of bidders will do their own. You'll do a low level of due diligence, but then each of the bid teams after that will then do a very detailed. The problem with that second approach is that's very onerous on the target company, because you might have 2 or 3 companies in the shortlist, and they're all got a third parties doing a due diligence on you. That's a killer for a small company, for example. So having experienced it this time around with TempCover, who are relatively small, we went up front, did all our due diligence, put it on show, and said, there you go. That's what you get, a very detailed and third party authority view on our company, warts and all, to some extent.
Well, just help us understand due diligence. So that's a company looking to buy another company, and the due diligence is around unpicking and understanding the ins and outs of the business that they're looking to acquire.
Yeah, that's pretty much it. And one of the rare things you might say is actually, I've not come across many explicit data due diligences. So we talked about, finance is clearly a very big part of it is the financial due diligence. Are they solvent? Are they, profitable? Are they growing? What costs? Everything. So it's that's a very detailed, arguably financial data deep dive on your company.
Right.
There's then a sort of commercial, which is all to do with how you sell your product, your commercial agreements, etc., because that's the thing that sustains the rest of the money. With most modern companies, there'll be a tech one, because obviously you're running on some sort of tech. Whether you're, when I was at the AA, we were a relatively sort of old company with lots of legacy and lots of new stuff. So, tech due diligence was a really big thing, because somebody didn't know where they were about to buy something and then find, crikey, as happened in one of the last transactions, there'd been an underinvestment for quite a long period of time. They knew that through the due diligence that they would have to come in and invest in certain areas, for example. And then I think the legal ones, there's always one around legal and sort of the people, but you very rarely find an explicit data one. And as my experience is, the data one sort of ends up in the tech one, maybe.
Yeah.
But at the same time, data is behind a lot of those other due diligences. So there will be wanting to understand the data that sits behind, HR, so the people stats, retention of people, salaries, etc. That's all data. The financial one, there'll be a certain amount of financial information, but when they want to drill down below that, you'll probably find actually that doesn't sit in the financial system. So you often end up looking at the data platform, which can maybe split your financial data by channel or something more sort of complex, for example.
Right. So yeah, two angles to this, isn't there? There's the data that sits behind the explanation of something like performance. So obviously, to understand performance, you need insight, and the insight is essentially data. So there's the kind of which is really the day job for a data function, is partly surfacing the performance of the business. So that we'll come back to that. And then there's what you're saying is less prevalent, less done, is a sort of specific due diligence around the use of, the application of, the capabilities around data within an organization. So assessing the data maturity and capability of the organization. Yeah.
And it's interesting, this time around, we had we did that as part of the tech due diligence. There was a specific call out.
Right.
I had specific calls with the company that were doing the due diligence. We connected and talked afterwards, and he said, I think there's an opportunity here. We don't, companies don't do a specific data due diligence and don't do it service. And he said, my background is tech, so actually I'm sort of trying to work out whether you've done a good job, or there's what scope is, how good your platform is. When that's tech actually, but how you're then bringing that to life in your data literacy and your reporting and all that sort of stuff actually is outside of their realm of understanding.
Yeah. And is the purpose of the due diligence is normally at this sort of stage you're talking about, is that to make an assessment out whether they want to make an acquisition, or is it more about the price?
It's probably both. I think bear in mind that the way the M&A tends to go is there's an initial sort of document that they can assess. They have to make a sort of some sort of offer off that, and then there's the ability to then ratify that later, I suppose. So they may not get to see the full due diligence at the point they make the initial offer, because then if you're in a bid process, you might decide, there's 20 bids, but you take forward the 3 or 6 or 5, best in terms of the money, best in terms of what you think is the right fit, depending on your own ownership strategy, makeup. So, for example, I've worked for companies that are private equity owned. They are running the bid process because they're trying to, maximize the investment return on for their investors. Arguably.
Yeah.
I don't want to say they don't care about the future, but they care about the return on their investment.
Yeah.
And they may only care about the future if they're still going to have a shareholding thereafter. Once they're out, no offense, but it doesn't really matter to them where it goes necessarily.
Yeah. I guess projections come into it. So the future is important from is there headroom to grow, but just less.
I mean, ultimately, a price. How do you value a business? And there's this sort of, in a lot of the world, it's a multiplier times an EBITDA. So talk about earnings before interest tax, which is very common terminology in private equity owned companies, and that multiplier is often dictated by industry. Sort of environmental conditions, etc., recession or not,
right?
And confidence around that, some of that financial projections that you've done, a 3-year, 5-year business plan, for example. How much confidence do they have about that's going to support the price that they're going to pay?
Right, got it. And so I suppose from your perspective, when preparing for, getting ready for, or being part of that due diligence process, what are kind of some of the things you need to do to get ready?
Do you know what? One of the things I'd say is you're never ready, and that might disappoint people. Think, well, if you no point then if you can't be ready. Well, actually, what I mean by that is the timescales that they often work to are only known by a very, very small inner circle of people. Right. And even then, they're exploring often a number of scenarios. So they're looking at a 1 year, 3 year, 5 year period. But then suddenly out of the blue, somebody makes an acquisition bid, and suddenly you're on, and you therefore want to get your due diligence. So how do you get ready for that? Well, actually, I suppose my experience has been you're thinking ahead to, I know what's going to happen when we enter the process, which is we're going to have to provide lots of detailed data. Always comes out. Generally, it's 5 years of detailed data that the third-party advisors at some point will want to see. So the financial data is very aggregated, by year, by month, maybe channel or something, and then they'll want literally detailed data underneath that because they want to be able to analyze and understand. Secondly, you talked earlier about the sort of the trends that might have occurred in your business. So if you look at somebody selling out has got 2 very odd years of pandemic, post-pandemic, affecting their business. And you may have other things that have happened in the last 5 years, like growth in channels, and you need to be able to explain those, almost up front. Yeah. So you need to be able to explain history. So it is having that almost, sometimes I've kept a bit of a sort of an encyclopedia of things that have occurred in the past, like, a new system or a new product launch or things that have happened positively and negatively. Right. To remember them, we're having to explain, well, why was our EBITDA, sort of lower in that month, for example? Well, that's actually because there was a fuel crisis, and that fuel crisis had, a significant impact on your numbers. Yeah. I think that getting ready can get harder depending on the scale of your company. So when we were at the AA, massive company, lots of products and services. But when it comes to the due diligence, you're going to have to provide a view of like 5 years worth of data potentially at product channel. That's a lot of data. Yeah. And the insight from it. Or sorry, not the insight. They will be analysing it and coming back to say, why did motor insurance do this in 2001? Right, okay, I think that's what happened in the insurance product or market.
Yeah, so it's interesting. So they're not really after your analysis of the situation up front. They're after the data, and they will look for insight, and then they will ask you to help understand it, help explain it, help unpick why something occurred. So it's not about preparing. It's almost detailed kind of like storytelling about what happened. It's more, here's the data, you crack on, let us know if you've got any questions.
Yeah, I think you can use certain bits if you've done a major project on something like segmentation or lifetime value, something very big analytically. Yeah, those things will sit well at certain points of that due diligence process because they'll want to see what you've done. But I think the getting ready bit is being prepared to be able to provide that level of data. And importantly, one of the first things they will do is when they get the detailed data is they want to reconcile it to the management accounts they've been given in the data room. Because there's this concept of the data room where there is like a library. I mean, in the old days, it used to be a physical room that they could go in, look at stuff, leave, not have mobile phones. Now, of course, it's all just in the pandemic, it was virtual. People didn't go in a physical room necessarily. Yeah, it's like a library of information about your company.
Right. And I'll come back to that data because that's quite sort of interesting how that works. But I suppose this, I haven't quite sort of connected dots here, but this obviously getting ready is you're in a process, and I guess not always all the people in a company know they're in a process of where they're being acquired, either at all, and it's sort of being kept quite secret, or it happens last minute. Right, we're in a process, we need to get some data across to these people. So is your experience that normally you've got a bit of runway, you've got a bit of a heads up, you can start to get yourself and I guess your team and data and tech ready, or is it much more seat of the pants, reactive, oh god, we've got to do this now?
I think it's changed. If I think back to the very first acquisition I say involved in, but we were an insurance company was acquired. I worked for the actuarial team. We were being asked for lots of weird questions as far as we were concerned around reserving, around pricing, and my boss would issue a load of questions to us, and we'd all go back, and we all probably weren't familiar. We were quite young, familiar with this whole merger. No one was telling us what was going on. Wind forward now, and I think their concept, for example, it's not unusual to issue NDAs to key people, and we're not talking senior level. We're talking at junior level. Going, here's an NDA. We're going to be going through a process starting, in 3 months' time, or next week, and you're going to be able to provide information. It's highly confidential. You can't talk to colleagues, etc. And you might even tell them who's in the inner circle that you can share information with.
Right.
And that's probably the better way of doing it. If you do it the old-fashioned way, don't tell anyone, and only the very senior people know, what happens is at a lower level, people have got a day job to do, and they've got these really urgent requests, and they don't understand why they've got these really urgent requests and what level of priority or accuracy do they need to put into it. And I've seen people, dwell on is I don't call it a simple question, but a challenge, and try and get an infinitely accurate answer when what was needed was a quick response and a view and a stated assumption, maybe is the way we say it. Look, we don't have that data, don't have this. This is the nearest proxy. This is our 24-hour turnaround answer to that question.
Which, yes, of course, you people need a bit of an understanding about why they're doing something, so that they know that that's the lens on it. So I guess either way, whether it's a rapid turnaround or you got a bit of visibility, sort of, privacy or secrecy aside, is there a way you've found that you get your team ready? So it might be a different mode of working if you've been very planned and good roadmap and been building out projects that were clear and stated, rather than this kind of quite reactive response. Is there a way that you've needed to get the team ready in the kind of right headspace for it?
Yes, I think I was just thinking as we were answering the questions earlier that I haven't really talked about the people side particularly within your data function, and it can differ, because you might find that the engineers are none the wiser, don't really need to know, and the governance people don't need to know what's going on, and they're unlikely to get asked that many questions, maybe. Yeah. But the analytics people perhaps come in a little bit later, because there might be a question around, can you give us a view on this? And then your sort of MI/BI team might be the ones that are actually creating this, 5-year detailed view of your company. And my past experiences, that has been literally, someone writing some code to create a data set, for example, right, that you have to zip and password and transmit to a third party. Right. In the most recent exercise, we granted limited access to our Power BI dashboard state. Right. And they had access to all of the stuff they needed over a 5-year period. We did some teaching, glossary, and actually my feeling from it was they got up to speed much quicker in our business by looking at the dashboards and seeing the wealth of information that we use to manage our business. So I think there was, that wasn't shown that's shown to your advisors are using that. It's not the bidders don't get quite that access to it. Yeah. But the advisors in the middle were able to, sit there and use that data, for example, and understand what's going on. But I think the people side, you have to be open and honest. The NDA stuff means it's much easier to talk about it openly. I think planning, having a good idea of what's going on in your team, and is that a urgent priority item, or is it something you're doing? You've got some free time, you've got some garage items that you're working on. And I think in the run up to it, I might sometimes try and spend a bit more time on the garage time to get capability ready, getting some self-serve capability, sorting out some issues that we do have 5 years of data and not 2 years, for example. I worked somewhere where we had brilliant 2 years, and I said we need 5. Why do you need 5? I can't tell you. We need 5. We need to find a way of cracking 5. For various reasons, we didn't have 5 available. By the time we actually entered the process, we had 7 years of data, and and we had cross-company interactions we had to sort out. So I think the NDA bit actually helps you be more open and honest with people, get them ready, and talk about priorities, for example. No, it's as you say, if there's a way that you can create that transparency, that obviously helps. That helps a lot. But one of the things that jumps out there, actually, just sort of separate from the people side, is the investment that you'd already made in having good visibility about performance. The data platform, the dashboards, the self-service put you in very good stead for a process like this. And obviously, it goes without saying that the more prepared that sort of your internally required
understanding of performance and insight is going to help you massively in a process like this.
Yeah. I think wind back to, when I joined TempCover just over 2 years ago, they didn't send me a job description of, you need to know how to do Python and machine learning models and stuff. They sent me 5 objectives and said, these are your 5 objectives that we need you to work on. And one of them was about getting us ready from a data room perspective and for an acquisition process.
Right.
And that included a bit about we may acquire and we will probably be acquired. He didn't give the detail, but they knew I'd been through 8 previous. So they didn't sort of need to tell me what to do. I just sort of knew that we need to get ready.
You know what you did before?
Which was, like you said, build a data platform first, because you didn't have one. So you need to have something.
Which, of course, there's more internal benefit to that, because you obviously don't necessarily know when this due diligence process will happen, but you need it anyway to help run a business, because that's a good thing to do. What bidders interested in? What are they actually looking at? And I guess that changes depending on the business, but there's some like big sort of topics of where they're normally looking, because that can, you don't know until they ask, but there must be a certain set of performance criteria, performance metrics, data they need to see that kind of gives you a heads up about what to get prepared for.
I think the metrics often so first of all, they often take the metrics that you use to track so that might be customers, sales, gross profit, EBITDA. We go down to quite detailed level EBITDA by channel, for example, so we can show quite detailed level. They want to see that across your channels and products, etc. So all those detailed metrics, depending on who the bidder is and how you're going to fit with their company, they might then inject some measures and metrics that you have never used before, or you don't use, or they're, as I've had sometimes, discussions or arguments going, that doesn't work for us. So, for example, we're a short-term temporary insurer. We sell 1 hour to 28-day policies. We don't do annual. When you're being looked at by annual insurers, you can't help it. Your mind is, I'm an annual insurer. Therefore, I ask them, what is your retention rate? And it's like, that doesn't really apply, because actually there's a different metric to describe, I think, I know that's the metric you want. What actually is the question?
Yes.
Which we all talk about. Actually, what are you trying to understand? I'm trying to understand repeat rate. You want to understand repeat rate, right? Repeat rate for us is how many policies does a customer buy in a year? So some people come back and buy more, some only buy 1. Right, we can give you that stat, and we can give you that stat by channel. Okay. So there's metrics that they use to run their company, understand their company. And then there is this thing about where those metrics go over a 5-year period. The big ones people are always interested is value. So we talked about gross profit, EBITDA, but actually, people want to see, do you have a measure and understanding of customer lifetime value? And we can get, another podcast for my, 3rd decade about lifetime value measures and mechanisms and algorithms, etc. But they just want to see that you've got a methodology of calculating some idea of lifetime value, and how do you exercise that in your business? So, for example, in some business I've worked at, we had certainly in one of the acquisition the AI worked on early on, they had never done customer lifetime value. So they talked about value of a policy, and a policy as in, I've bought roadside. Someone said, what about the customer who's got roadside and insurance? And no, we don't have that. We have them together. And you can't do that because some customers, so lifetime value is a really big one that tends to come up a lot.
So there's some good sort of preparation you can do about things that are likely to come up. Then there's being ready and responsive and reactive to the questions that you don't have. And I guess thinking sounds like sort of creatively around how you have that conversation to make sure that you answer the question, but maybe with a different metric. But it's sort of having that kind of preparedness but reactive ability at the same time, so that you can respond as you need to.
I mean, I remember the very early days when I did one, I was involved in one, and I remember getting these questions. It'd be like, it was always about 4 or 5 o'clock, and the answer is required by 9 a.m. tomorrow.
And
you're going, right, do I bore the ocean? And this is where I think sometimes if you're a more senior person that is, still got some closeness to the data, but you're not going to do the most accurate set of code, but it's going to be approximate. And because the answer thereafter is it's 4. not that it's 4.32678, whatever. Do you know what I mean? It's, you're trying to come up with an approximate answer. And the most important thing I learned was state your bases. So even if you can't, if they've asked for, X, Y, and Z, but you can only do X and Y, just state the metric with X and Y and say that's the best we can do.
Right.
And I think we set us up a challenge this time, and we've done it before, which is that our turnaround time was, we wanted to turn around things in 24 hours.
Right.
Some things you've got to hand, that's the answer. There's the stuff. Other things, actually, we need to go and talk to our third party, because we've got a third party company that help us do that stuff. We need to ask them. So sometimes you need to have, there's lots of companies use third party, advanced analytics companies. You might need to have them on call to go, you will need to be ready to respond within 24 hours to a question, perhaps.
Yeah. Yeah, good point. Not always your own internal team. Back to the kind of due diligence of the data function. The data function might actually be an outsourced insights team somewhere. So need them on board. Cool. One of the really interesting bits sort of in M&A. So I did some work a number of years back for an organization that was owned by a private equity firm. That private equity firm were looking to sell the business, make their buck. And for the kind of 2 years we were in there, we were helping to manage and improve their use of data, their understanding of performance, metrics across the business, distributed amongst the team, tracking and managing, all the good things you want to do with data. But when it came to the point that they were ready to try and move the business on and sell the business, I helped them with a couple of pages in their pitch deck, which talked about the work that had been done in data, the work that was still left to do in data in terms of value and opportunity. So is that sort of, this is a different view of it, really? So you've got the kind of like mechanics and the operational process of the acquisition and itself. Yeah. But there's also the kind of like, we want to show what value there is to insight to the business. This is how we use it. And you talked about that with access to Power BI for your advisors, but also where's all the rest of the opportunity? Where would we invest in giving our business better performance by applying data to it? So is that something that kind of you think about? Is that something that comes up much?
Yeah, definitely. I think the hardest thing to get over, and I had to get over it myself, was the target or objective of the exercise is not to paint your function as, gold star, no room for improvement. Yeah. Because if you do that, one, it's unlikely, but don't even try and go down that route. You need to be able to be sort of open and honest to some extent, and keep some stuff back about when it's a bit creaky underneath, but actually sort of showing some of the things that you've done and that they're working. Some of the things that you maybe have tried and didn't work. So I remember in the Saga AA deal, some of my team got really frustrated that the new guys arrived like day one, asking loads of questions about stuff that we had done 2 years ago, didn't work, and they wanted to, dust it off and do it again. I was saying, look, actually, this was around the time of the credit crunch. Economic conditions have changed. The world's changed. 2 years is, might not sound like a long time, but actually is. And they've got a different angle on it. So actually, let's listen to the proposition, try it, but don't sit and go, we've tried it, done it, it doesn't work, type thing. Yeah. And I think you can, there's you've got to try and accept that you're not trying to paint this rosy picture that everything is fantastic and there's no room, because if there's no room, that affects the multiplier. Yeah, quite. Yeah. Well, to your point, your example before about customer lifetime value. So if you have worked out customer lifetime value, but you haven't really done anything about it, that's like we've done some work to understand it, but the opportunity is applying customer lifetime value to how we market, how we educate our customer, what kind of things we sell, our new products and services. All of a sudden, it opens up this hopefully ream of opportunity that the next inquiring, the next owner can implement. So the groundwork's been done, but now there's the opportunity to kind of go after it and really add some value. Yeah, I mean, lifetime value, customer lifetime value might sound really simple, but for a lot of organizations, if you're even if you're fairly new, you may not have the concept of customer because you've always just sold products, and you might have an account, but you've never really worked out, and you might just say, well, it's a retrospective view of how much they've spent. Great. Or you try and do a prospective forward, whatever mechanism you use to differentiate between cohorts of customers. And the application bit becomes, okay, we've applied the learning in this area, but actually there are 2 or 3 other areas where we just haven't got around to it yet. want to use lifetime value to vary the discounts that are offered to customers in our CRM, for example. That's on the table. Everything says from history that works in other organizations, so it would work for us. There's an upside there.
Yeah. And is your role as the company being acquired to make sure that you demonstrate that you're almost like trying to sell the opportunity, or really is that for the acquiring company to kind of try and work out whether it's there or not? Where does it come from?
It's a weird one. I think there were definitely some meetings I was in where a lot of these big teams, advisors that are working, whether they're, if they're private equity, they're smart cookies, right? Or they're the advisors for some other, big corporate, for example. They're very smart people. This is what they do for a living.
Yeah.
You don't do this for a living.
Yeah.
And therefore you can feel like a bit like you're under machine gun fire. They're firing questions, might feel a bit hostile at times, other times it's not. And you go through these different emotions about how do you respond to certain things, particularly when, there may be, if you haven't got a good case, like you've got don't have a great data function, you haven't done a lot with your data, it's not going to look good, because they're thinking we've got to come in, there's an opportunity, but actually we've got to invest, and it's going to take time to turn that ship around, I suppose. So I think my experience is they often have a team, and it's not dedicated to data, it's more like a commercial team that are looking for where are the synergies with their company or with other companies or contacts, where is the ability to exploit analytics. They're consultants who've come in and done this in 200. I might have done 9 acquisitions. They've done this in hundreds of companies.
Yeah. No, I can, and I guess there's also something about particularly if they're I know you've been acquired by companies where there's other companies in the group, and you're going to become one of them, and they will have an idea of, well, how can we join these businesses together and cross sell, upsell, or economies of scale, or so they'll know some of that, but that's kind of add that to the value that's already on the table for them through better insight. I can see that being quite powerful. So I just sort of thinking about, so we talked about due diligence, talked about what happens there, the kind of data room, the provision of data, the kind of this back and forward, the showing value, that sort of thing. And at some point, one of those buyers will do the deal, and then you're acquired, and then of course you go home and you sit and put your feet up and all the work is done. Now what happens once the acquisition's done? Because I know from my own experience that there's, just outside of data at all, there's always a bit of uncertainty just through a process, but also once it's done, what's going to happen? Are they going to merge teams? Are they going to make redundancies? So there's kind of that side of it, just kind of the human element of the acquisition's done, now what? And then I guess also the data side of it, do all of a sudden, while the strategy might be a bit up in the business strategy might be a bit up in the air, how do you kind of what's the kind of modus operandi in those early days once you kind of now have a new owner?
Yeah, it's a difficult period for you as a leader, whether you're a data leader or another leader in the company. It's a difficult time for your team. Particularly, some will be naive to it because they've never been through it. Some will have heard what it's like and will be scared and may jump very quickly because they don't want to wait and see what happens. And in particular, probably because I predominantly work for companies which were FCA regulated, what happens in the process is you get to that, what is it done? You sort of exchange contracts, heads of agreement. You then go through and wait for FCA approval, which could take 2 months, 3 months, 4 months, 6 months.
Right.
During that time is a real limbo because the current management team need to carry on running the business and keep on executing. The bidder could pull out, unlikely, unless they found something really bad or the FCA didn't approve it. So you then have this period where the new company are almost got a bit of a lid on things. So hang on, you can't still recruit. We can only recruit certain positions. So you got that. You're right. There's a real limbo period, and if that's happening, and you've got people who are completely unaware in the organisation, and once you've exchanged, you're going to have to announce, so people are going to become aware.
Right.
And that period, because of particularly for FCA approved companies, that can be 3 months, 4 months, 5 months before it goes through. That's a long time. And my experience in some companies has been, some people have jumped because they know that who it is, and they've got a group data function. We're just going to get absorbed into them, or they'll take our jobs. And one of my very earliest experiences was I worked for an insurance company on the South Coast. We were quite a specialist insurance company, sort of high risk, cars, houses, etc. We were bought by what was then CGNU, on its way from Norwich Union to Aviva, as it eventually became.
Right.
They ran a brilliant process to acquisition. They'd done it a number of times, so they knew what they were doing. But said on day one to us, there is a group actuarial function in Norwich. There is a group analytics function in Norwich. Guess what? The cost difference in people costs in Norwich is very different to somewhere on the south coast within an hour of London. So they said they just very, very brutally said on day one, you will have jobs, but they'll be in Norwich. And I did actually do a comment for a period up in Norwich back in the late 90s. It wasn't for me, didn't suit the family, etc. So I enjoyed working with the people, but it wasn't going to be for me. And I think so your data team will be starting to make those assessments, and you've got to try and put your arms around them and try and keep them together, assuming that is the right thing. If that's not the right thing, if you think actually, look, the way we're going is, yes, it's going to disappear into group, and group is based in the other end of the country. The people who have been here for X number of years are going to wait for redundancy. The people who've been here 5 minutes are going to get nothing, are going to want to exit straight away. And particularly the example I talked about, we had a load of actuarial students, qualifieds. Some of them were concerned about the job market in the local area because they wanted to work in the local area. And they if they'd been there less than 2 or 3 years, weren't going to get any money. They just left straight away.
Right. Just protect.
Yeah.
Interesting. Yeah. And as you say, in that limbo period, and I guess soon after, all of that's through, again, questions of priorities, questions of which pieces of the business strategy do we pin to, all come out as well. So in terms of the actual work that you do, I guess that becomes a bit murky as well.
Yeah. Funny enough, I remember trying to remember which acquisition it was, but I remember a period where we definitely had about a 3-month gap. They announced that this guy would be the new CEO, and once it's approved, he would take over as CEO, and then he'd work out what his management team is. What you often see there is the directors group maybe either do know or they've guessed, and they often disappear and don't turn up. So you've got none of that group in, and I think that's frankly terrible. I personally would always turn up until the day I'm supposed to go. I think not turning up and not carrying on, if you've got no business strategy or whatever to do, go and help your people, for goodness sake. Don't just go off and play golf, for example, or go shopping or something. I think there's a this guy was walking around the business, getting to know the business in that 3 months. He had a little black book. He was making his decisions, recommendations, etc. And then on day one of the deal completing, he could go board, strategy, this, that. That's how it's going to be. It was right. I thought a brilliant display of how to do it versus some I've seen where it was all a bit. Do you know what? Now we're going to work out what the business strategy is going to be. It's like, hang on, you've just paid a load of money, and right. So, but what we used often that 3-month period, that existed, or 6 months or whatever, in the analytics team, I'd say to them, right, let's go and build a segmentation. Why? Because they might need one. But if it's much easier to take a segmentation you've built and iterate it or do something, or so we do what I call the analytics garage stuff. With a bit of housekeeping. I call it trying to keep busy, doing useful things. And I suppose when I was the data leader, or before I was data, we would look to go based on who it is. We now know who it is. We know what they do, what their products are, what we think the likely outcome is going to be for us. Let's work out what we should do.
Let's get ready. Yeah. Let's get ready. Very good. Very good. And I guess just to kind of finish up, because there's so much kind of like experience through those 9 transactions, but someone, if someone's listening and they're kind of in a company being acquired, or about to go through it or something, what sort of, if you sum up all of that, what are the kind of 3 or 4 things that they should kind of like have top of mind to get them through, getting ready, looking after the team, what are those things that they should really focus their attention on?
I mean, we started the conversation around the plan, and I think you can plan in the sense of the readiness. So try and think of the things that you need to have in place. If and you don't sit there and say, well, I've got 3 years. You won't have 3 years. Almost certainly you've got a shorter time span. So you need to be ready. And I would, I was told I had 2.5 years. Actually, we started it a year after I joined because of markets, etc., etc. So actually, you've got to plan and be able to sort of move your plan around and build capability. I'd just say be prepared whether you're the data leader and your team. You're going to work your socks off, trust me, because they are going to be coming in with a whole range of questions. Some of it I sometimes think, are they just testing us? Are they asking this really weird, obscure question to test us, to see whether we're,
you really know it.
You know me, I'm not, I don't like to get beaten on stuff like this.
Yeah.
So, I will find a way to answer that question, and I'll use some assumptions to say that's how we got to it. So yeah, and I think, be prepared to produce a rough answer in the time permitted. So someone else is going to decide the time. Don't go back and say, it'll take us a week. You say, well, the answer you'll get in a day is this is the answer we can do in a day.
Yeah.
I think also it's a really good time for the data team to shine. So my record of the 9 acquisitions, and probably a couple before that when I wasn't necessarily, I wasn't data leader at that point, was I was only asked to leave once afterwards. And I'd sort of blame that on, there was also a pandemic going on and they were having to cut costs massively. So I'd like to think I might have ended up staying around if there hadn't been a pandemic. But it's a chance, and the team stayed as well. So I'd like to think it's a chance for you and your team to shine with what you've done. You might have some bad stuff, you might have some crappy parts, but actually it's still a chance to get those on the table in front of people who might actually care and want to invest.
Yeah.
But some of your failings will be on display through this process, but
embrace them.
Yeah, you've got to get over it. It's hard, but trust me.
Yeah. Sounds like you grow some thick skin doing a few of these. So great. A world that I've had a sort of little window into, but yeah, it's really sort of helped bring it to life a little bit, and help understand how this process works, and the role of the data leader and data function during it. So yeah, great discussion. Really appreciate you coming back on the show. Last time you said data is a journey. Do you still think data is a journey?
I tell you what, data and acquisitions is definitely a journey with a destination. Definitely, there is definitely a destination, or as you describe it, a waypoint, because then it goes again. Absolutely.
Well, brilliant to have you on the show, as I say, and thanks for coming back, and thanks everyone for listening. I hope you enjoyed today's episode, and we'll catch you again soon.
Thank you, Jason.